Hello and welcome to the Liquidity event. We are your hosts, AJ and Shane, and I'm your booming. Welcome back to episode 102, being recorded on May 7th. I'm hurting AJ's ears because I'm booming into the mic right now.
You're also hurting all of our listeners' ears by booming into the mic. Sorry, guys, we forgot how to do this.
Is this good or bad?
It's bad. You're too loud. You're too loud.
Unique New York. This episode is being recorded on May 7th. Will be airing on May 10th. A quick reminder for your listeners. We will answer your questions on the pod if you leave us a message. You can disguise your voice and use a fake name if you're shy. I've listened to a lot of these podcasts where people just like, hey, I'm anonymous and I want to fire all my employees. What do you guys think?
You can hear the voice. I'm like, what's wrong with you people?
It's literally, if any of your employees are listening, they're like, fuck, that's Dan.
Yeah.
That's Dan. That's my CEO. And it's always like on a podcast that has like 500,000 daily listeners or whatever. So I find it very funny. The link is memo.fm/the liquidity event. And we'll put a link in the show notes for you guys if you guys want to leave us a question on the air. AJ, how are you?
Dude, I'm great. It's been, 6 months since I've seen you? Literally the last time I saw you was on this podcast back in July of 2023. How are you? How are you?
Is that the game we're going to play?
It's so good to see your face.
Good to see you again. What's happened since episode 101 in your life?
Not much. I got a haircut. My tooth fell out yesterday and I got it replaced. That was fun. That's pretty much it. How about you?
Yeah, same. My teeth fell out too. I have no teeth now at all. Luckily, we're not doing a YouTube version of the podcast anymore.
Oh, no, we are.
Oh, shit. SmileDesign.com.
This podcast is brought to you by Smile Direct Club from now on. Didn't they go to business? Anyway, so the link that you were mentioning, this leaving a voicemail thing, is actually going to become a lot more important on this show going forward, because for listeners who have been with us since episode 1 know that we like to talk about the news. We pull a bunch of articles related to personal finance, to the equity markets, to stock options, and then Shane and I, or whoever is hosting at the time, runs through those articles. We talk about it. We give our opinions. That was like kind of fun, I guess. But for the most part, I don't know, if there wasn't like a lot to talk about. We were just kind of like going through stuff. And I don't know about you, Shane, but my circle of friends often text me personal finance questions because I am the only person they know that knows anything about money. So we're basically going to take that kind of like chat between friend and financial advisor and bring it to this podcast. So if you want to ask us literally anything, you can leave us a message. You can also email us if you don't, or if you aren't comfortable speaking, and we will literally answer your question live on the air. We know a little bit about money, right? And how it impacts people's lives. So like, I think it's going to be fun. We'll do like articles, I guess. Did you find anything interesting you want to talk about this week?
Well, it's funny you say we know a little bit about money. It's funny how often, or you forget how much you know. 10 years, 15 years of doing taxes and financial planning and investment management and business advisory for small businesses. I don't know what I don't know about money at this point, which is you take it for granted, but it also freaks my friends out, which I find very funny. My friends came down to Mexico City for my birthday, and I bought a house down here. So two things.
Quick update. Yeah, quick update, y'all.
Yeah. So they came down and like we start, you go day 2 or 3 of like somebody pays for this, somebody pays for that. And then we're like, wait a second, we should actually track this stuff. I'm like, all right, yeah, I'll fire up the Splitwise. I'll add this stuff in. And then everyone starts to get nervous because like a CPA is doing the tracking and like they think like it's no
They're
longer.
Like, we're getting audited, boys.
We're no longer, this vacation's no longer running on vibes and everything's going to work out okay. But in reality, I'm leaving out like 15 Ubers that I bought and I'm cutting the expenses. Like everyone, but they all get so fucking nervous. It drives me crazy. It's like, relax. I'm not.
Yeah, you never want to be you always want to be the banker in Monopoly, but I feel like you never want to be the Splitwise admin.
No, everyone's mad at you because
you're the worst. Yeah. It's not a good position.
This trip was in April. I was buying things in February, tickets to stuff. And then during the trip, we're all drunk, like forgetting who got the Uber. And then afterwards is like doing the accounting later. I'm going through the receipts, different credit cards, who paid for that, who Venmoed me this. And they're like getting mad at me for adding stuff 2 weeks later. It's like, yo, I just got a bill from September from my insurance agency for $22. And if I don't pay that, my credit card's going to tank, or like my credit score is going to tank. Relax when I throw an Uber in like 2 weeks later after the trip. Anyway, go ahead.
Question. Would you rather be the accountant, treasurer, splitwise admin person for a bachelor or bachelorette party with 15 people you don't know? Or would you rather be the executor of the will for a relative you don't know, by which you know there's a contentious relationship between the people named in the will?
Obviously, number one. Number two is a fucking multi-year nightmare. That
I don't know, man. Have you ever been on a bachelorette party with 15 people you don't know? No, you're right.
That does suck.
Yeah. No, you're right. It is much worse, but it is similar vibes, right? It's like a thankless job that you don't get paid for, that no one wants to do, that you get stuck with, but it's an important role nonetheless.
Yeah, for sure. Yeah, I mean, dealing with my dad's own estate, like that's, even if it works out perfectly, there's still those feelings of like, is that what the intent was? And then, yeah, estate planning is the worst, dude. Like the sentimentality and the not being able to deal with the grief. Most people don't go to grief camp like your boy does. So when the grief hits, they just shut down mentally and they can't handle money. So,
I mean, when I wake up hungover at a bachelor party, I also shut down and don't want to think about money. So similar situations.
Yeah.
So yeah, quick life update. Where in the world are you located these days?
Yeah. So since last episode, when was our last episode, AJ?
July 7th of 2023.
Okay. So I was already down here in Mexico, but I think we stopped the podcast because you and I were both doing some revenge traveling in 2023, which I think a lot of our listeners did as well. And based on how many people were on flights in Europe last summer, yeah. And I've talked to a lot of people this year that are just planning on doing way less traveling, including your boy, because they got it out of their system in 2023. I was on 50 flights last year, which is essentially one per week. And so we shut down the podcast. How
many Delta lifetime miles you
got? Do you mean million qualifying miles, MQMs? I'm only at 350, unlike your girl, who I think is trending towards her first million.
No, I'm like 560,000-ish.
All right. Right into the Delta Dick measuring contest. Welcome back to the Liquidity event.
Woo!
Ladies and gentlemen.
My Delta Dick is bigger than your Delta Dick.
Yeah, there it is. That didn't take long. We're 6 minutes into the episode.
Which I'm going to use this opportunity to, we'll get back to you in a second, Shane, but by the time this airs, last night, we will have done a BKFI travel hacking webinar, talking about Delta points, talking about hotel points, how to travel for free, how to beat the credit card companies at their own game. So you'll have to grab a recording, which we'll throw in the show notes. That happened last night. But second time we've done this webinar, I have a lot of fun doing it. But anyway, you live in Mexico.
Yeah, long story short, I live in Condesa in Mexico City. So for the listeners out there, yes, I can give you a list of places to go. No, I will not take you to Xochimilco or the Lucha Libres. I've done it too many times. I'm not going to Teotihuacan. I'm not going to Frida's museum anymore. I'm done with the Statue of Liberty tours.
Stuff. Okay.
Yeah, I'm done. But I will take you to the best restaurants in Mexico City, and we will have 2 martinis.
Great. And you will teach folks how to not pay taxes in the U.S. I'm just kidding. We're not going to do that. I'm in Brooklyn still. Loving Brooklyn.
I didn't ask.
It's okay.
Moving on to our next article. No, but give us an update. You're still bi-coastal?
Still bi-coastal. As you can tell by my background, for those listening, not on YouTube, my toxic trait is that I'm not really into golf. Like that's my form of meditation. A lot of people are able to meditate in yoga classes or through apps or through higher self-actualization. I'm not able to do any of those things. So I need to go out into nature and try to hit a ball with a stick, which is apparently very hard, I'm finding, but I love it. It's my weird new thing that I do on the weekends. And if anyone wants to play golf with me, just hit me up. I'd love to, love to play with you. That's what I've been up to.
Thus extends your behavior as a 50-year-old white man, which you've exhibited for the past 30 years.
No, not 50, more like 68. I feel like I'm a 68-year-old white man.
Yeah. Hard problems.
Golf.
Used to be into food. Works in finance.
Used to be interesting.
Overeducated. Brooklyn. Yeah.
All the above. Speaking of aging, I got one article for you.
Oh, we're already doing the segue competitions now. Okay, let's go.
It's on like Donkey Kong. So Equinox.
Also very boomer of you that on like Donkey Kong. Okay. My dad said that shit in like the 90s. Let's go.
Welcome back. Welcome back. Speaking of aging, Equinox, everyone's favorite fancy, expensive gym, is launching a $40,000 a year membership to help you live longer. So Equinox, luxury gym brand, has branched out into hotels and other things, is trying to capitalize on the longevity market. So people who are trying to biohack their way into living longer and living healthier longer. So for 40 grand a year, basically you get a bunch of personal training, you get a bunch of your vitals measured, your blood, your whatever levels. Have you ever done any of these things where you send your blood away and they tell you like your biological age? Have you ever tried these?
No, that requires having a mailbox. Unfortunately, I have not had a mailbox for about 3 years. So I am missing out on longevity. I think you did it though, right? Didn't your...
I don't want to talk about it.
It's your chronological age versus your biological age. Like chronologically, you're 39, right? But biologically, you were 50, right? Was that how it came out?
Yeah, something like that. Pretty much. Yes, I did do it. I sent it wasn't blood. It was just a swab of spit. And I think it was like $200, which to me is probably, you get what you pay for. So I probably like underpaid for it. And yes, I was disappointed to find that though my biological age, which is a measure of the health age of your body via these metrics, was older than my actual age, and I did not like that one bit. So I'm anti-longevity. That's my hot take here.
Because anecdotally, you did not have a good time. You are
anecdotally, I was not pleased with the results. Therefore, I'm not interested in this entire sector.
Okay, you sound like my nephew who's blaming his teacher for being. I'm bad at math because my teacher sucks. Is basically what you just said.
No. I'm into this stuff. Look, I want to live longer. I'm on a health kick. I know you are too. Like working out all the. Oh, you're not. Okay.
Not lately, bro.
Oh.
No. I mean, I
you
guess
were when I saw you last.
I guess another update for our listeners is I did fall off a skateboard and shatter my shoulder in October, and then I got surgery in February. So unfortunately, I've not been in the gym very much over the past 6 months. A lot of sling time, nice big new scar. But I was in the gym this morning, and that's why I'm booming into the mic today.
Boy, here we go.
Because I hit 5 sets of 12, baby, on the squat rack.
Anyways, so for $40,000, it's called Optimized by Equinox. They start with a bunch of tests. They've partnered with this company called Function Health. They will test you for 100 biomarkers, everything from heart, liver, kidney health, blah, 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 your VO2 max, your strength and movement range. And the tests are repeated twice a year. So you get like constant feedback on the progress you're making. You get a concierge. I'm sure there's some nice app, but you're like, what do I get for $40,000? Really what you get are 3 60-minute training sessions per week with a trainer. So basically you're paying, it's like $250 per hour session with a trainer 3 times a week, all year round, which is actually kind of a good deal. Like if you're already doing personal training, like $250 an hour is like, it's kind of a lot, but like for this like concierge service, I think they're like kind of selling it wrong. They just need to say like, it's a personal trainer. It's like a personal like fitness coach, nutritionist, all the above wrapped up in this one service. But I don't know. I'm not going to do this. I think it's too expensive. I don't have room in my budget for this, but I bet a lot of people I bet this is going to do very well for Equinox.
Wow, I missed that part. So I did some quick math here. 3 training sessions, $250 an hour, 52 weeks out of the year. That's $39,000 right there.
Right.
So if you're already paying that for a trainer, you might as well pay an extra $1,000 for biomarker testing and a nutritionist. But I doubt trainers are getting $250 an hour. Is that what they get paid? I don't know. In Mexico, everything's you just chop the last digit off, and then that's what you're paying.
Don't ask Shane how much a gallon of milk costs, you guys. I think a virtual trainer is anywhere from $50 to $100 an hour. I think a high end like good trainer could be $250 to $300. That sounds expensive to me, but I don't know. I would not pay that personally.
You want me to find a correlation between your biomarker, like something that correlates with how long you're going to live is your fucking zip code, bro. Whatever. First of all, if you can afford $40,000 a year, you're going to live to 100. You're already there. I don't know, unless you're smoking. Like, also, okay, here's my hot take. If you can spend $40,000, that's not that spicy, but if you can spend $40,000 on healthcare, on personal trainers, like you could probably break out all of these things. Like you probably have a chief of staff in your personal life already to figure all this stuff out. I guess the value is it's bundled here, right? Like if you're going to get the biomarkers done, if you're going to get a nutritionist, if you're going to get a personal trainer, if you're going to have somebody manage the gym memberships, if you're paying $40,000, you're probably traveling all the time. So you need somebody to manage your calendar. You need someone to manage your inbox, your Gmail inbox, as well as your literal physical inbox. Like, I guess this is for that price point where you can't afford $70K per year for a nanny to do this. I have friends that do this for a living in New York for $70, $80K already, that manage a lot of these things for you already. So $40,000 for this is like somebody that's making, I don't know, $1 million a year, but not $2 million a year, and has that chief of staff that works the house. I guess this is like mass affluent market, but not truly upper middle or upper class folks that have just money to piss away.
Like, I think this is not something that fits in my life, but I don't know. I think this is a good product. Like, go Equinox marketing team. Like, I think this is going to do well. I think they're going to fill up real quick. But let's talk about things that actually matter.
I could see this. I could see this being especially because the reason you go to Equinox to begin with is to go see other people that are at Equinox, right? You're in an executive position. You are a wealth manager. You're a doctor. You want to see clients. Like, why are you spending $300 a month for a product that's worth probably $70 a month? You can go to another gym that has, the machines are just as good.
But the eucalyptus smells so good.
Right. So it's the same. It's the same as the Soho House, right? Like, you can go to a pool for $2,000 a year, but to pay to go to the Soho House for $10,000 a year is because you want to rub shoulders with other people that also have $10,000 a year to piss away on luxury products like this, right? Like, there are some services, but it's nicer, sure. But like, the reason I'm paying for it, or a lot of people that I know would pay for it, is to get more clients, to rub shoulders, to find your future wife, find your future husband that can afford that price point, right? I mean, you're already married, so you're
yeah, I guess I've never
space.
thought. I think it's just more of like a luxury. Like, if you can afford it, the Equinox gym experience is far superior to a New York sports club, like in terms of niceness and towels and quality of classes and whatever. So
towels.
I mean, honestly, I used to go to Equinox because of the eucalyptus towels in the steam room. I would wake up every morning. I would bring my like huge leather tote bag to work with my like packed lunch and all my gym clothes, and I'd go to the gym before work, shower because it was nicer. I went to the gym because it was so much nicer than like the shithole 4-bedroom apartment. I had one bathroom that I shared with 3 dudes. Like, I wasn't showering there. I was showering at the gym. So for me, it was like this way to have luxury in my life when like my apartment was a shithole. And like through work, we got like a gym subsidy. So it was great. So I did not pay sticker price for Equinox.
Right. I continue to maintain my theory that high standards are a curse and a tax, and that's just my Mississippi upbringing.
Love that for you. Okay, so we're gonna do something new here. So each week we might talk about an article, we might not. I found that article interesting, so I wanted to talk about it. But we're actually gonna focus on listener questions. So we have about 400 clients here at Brooklyn FI who ask our financial planners questions all the time. They get very personalized answers to those questions in meetings, in phone calls, in emails. Some of those questions may make their way into this podcast, but a lot of these questions are going to come from you, our listeners. So we polled a few of our big fans from podcast V1. We got about 20 questions, so we'll be answering those over the next couple of weeks. So ready for our first listener question?
Let's do it.
Hi. I just accepted a consulting gig and am being paid in a mix of cash and stock options. I'm not sure what kind they are. What should I be negotiating for? Ooh, good question. A little bit of equity compensation, a little bit of business ownership, a little bit of startups. So first of all, they're a freelancer, right? They're not an employee. So this person's not sure what kind they are, what kind of stock options, what kind of equity. We can just assume that these are non-qualified stock options, right? Because they're not an employee.
They technically have to be non-qualified stock options because they're not an employee.
Yep.
Incentive stock options are not permitted
Yep. So first question, I'm not sure what kind they are. Well, we can answer that for you. They're non-qualified stock options. So any tips for this person to negotiate if they're being paid in a mix of cash and non-qualified stock options? It's a consulting gig. We don't know any other details.
Yeah, sure. Well, if they're paying you in stock options for a consulting gig, I imagine it is a very intense consulting gig. It's going to be more than a 5-hour gig. It's going to be something where they're replacing an employee or they're trying not to pay payroll taxes and healthcare and all that additional benefits to you, and they're just trying to keep costs low. So that's just what I'm imagining there. So you're going to be very involved with this company. So you're going to have an idea of how well they're doing, how fast they're growing, how big the team is, the morale within the company. You're probably in their Slack channel, et cetera. Now, all that's pretty much anecdotal. If I was going to be advising this person, it depends on their personal financial situation, because if you just need cash, if you need to pay the bills and you need to take cash out of the company, and I would lean heavily in terms of the seesaw between cash and stock options towards cash. But if you are already financially secure, you have economic security, you have a spouse that's providing for you, you have no kids, no dog, et cetera, the only way you're going to get rich in this world is through equity, frankly, like relative to other people that have W-2 jobs. You just can't get quote unquote rich without having equity in a company. So it is a gamble to take more stock options. I would probably go 75. If you were financially secure, I'd probably go 75-25 stock options to cash. If you need the cash, just take it. Maybe do 10% equity. What do you think?
Yeah, I agree with you. I think it really depends if the company is public or not. If this is we typically don't see a ton of non-qualified options being granted at public companies. I do see it. I have seen it. So if this is a private company, there's significantly more risk, right? You run the risk that these stock options could be worth nothing ever, right? Whereas if it's a public company, there is a public market for you to sell these, to exercise and then sell these stock options at some point. So to me, there's a lot less risk if this company is already public. There's already that market for it. So that's question number one. So agree with you. Yeah, if you're already financially independent, I mean, I love stock options. They're great wealth creators. Our entire business is built on stock options, creating wealth for people who would have never otherwise had access to that level of riches, right? The other thing, like what is on the table for negotiation in a role like this, right? You're a contractor. Sure, you can negotiate your hourly rate. That's fairly obvious. But one thing that's interesting with options of this kind, especially with contractors, is the exercise period. So this is something that I would negotiate for, which is, hey, you get these non-qualified stock options. They probably vest immediately just because you're a contractor. So you probably receive them, or maybe they're project based, or maybe they vest after 1 year of working with this company. But what's important to negotiate is how long you have to actually exercise them. Because if it's a private company, you want to have a longer exercise period, meaning you are waiting for that company to have a market available for you to sell those options, to actually turn them into cash, turn them into that wealth. So the longer you have to do it, you're basically waiting for the company to go public. So if you only have a 1 year exercise period, that means at some point you're going to have to come up with your own cash to buy those options and pay any taxes on them. So to me, like, that's where it gets really risky when it's a private company with a really short exercise window.
Yeah, and something else to mention is just how I love that take on that. It's very much true, and it reminds me that we've seen a lot of negotiated stock option packages at Brooklyn FI, probably thousands of them. And it's interesting how almost everything is negotiable, whether it's the exercise price, which is everyone thinks, all right, I want a lower price when I exercise. Sure, that one's hard to get, but you can also negotiate on the expiration date of the options. You can usually push those out 10 years, so you can just sit on them and wait as long as possible before you exercise. That's a good option to have, gives you more flexibility. You can also negotiate on the amount or the strike price. You can negotiate on how quickly they vest as well. You can have them all accelerated vesting. And I think that's a really nice one. Just vesting isn't the same as exercising, right? So the sooner they vest and the later they expire and the lower the exercise price, all of those things are good things. Yeah. Outside of just the number and the value of them.
Another weird thing I'm thinking about is, like, if you're getting a consulting gig at a company that's paying you in equity, like, this is probably a pretty big consulting gig. Why are we dealing with hours? Why are you reporting your hours? Just give them an estimate, come up with a big number for a project, divide it into 3 parts. Part 1, I'm going to give you these 3 deliverables. It's going to cost 10 grand. Part 2, these 3 deliverables, that's another 15. And then, kind of stagger it that way. That way you don't have to deal with tracking your time, which sucks. You can send them one invoice. Everyone knows how much it's going to be, and there's no back and forth. So that's what I would do. Let's cut it with the hourly stuff when we're talking about these kind of big high level consulting projects. That's all she wrote. All right, I got another one for you. So I missed the tax deadline. I was overwhelmed and just couldn't get it together. Am I going to jail? What can I do? I am low key panicking. Ruh-roh. What do we do if we miss the tax deadline?
You are wanted by the government, actually. I would lay low for a while.
Don't scare the children, Shane.
I might book a flight to a non-extradition country. I recommend Venezuela. The conversion rate is really strong there right now. I would bring a gun with you, though. Now, if you're gonna, if you miss the deadline, it depends. If you are owed a refund from the government, then you actually have there is no deadline besides 3 years from the date of the tax filing deadline to get your money back. Actually, billions of dollars every year are forfeited because people don't file their returns at all and they're due refunds. So if you miss the April 15th, April 19th is my birthday, April 15th, 2024 deadline, you have until 2027 to claim your refund, 5, 6, 7. And otherwise, there's no penalties. But if you do owe money, we do have to recommend that you just file your return as soon as possible.
Yep.
Because the penalties for not filing are 10 times heavier than not paying your tax due. So I would definitely file, get that tax due to the government, or at least the amount, state that to them. And then if you can't pay, I would go on a layaway plan. Essentially, it's called an installment plan.
Yep.
And then it sucks, but you got to pay. Since you missed the deadline, I would pay an accountant to help you out with that. Pay the few $100s to keep your penalties lower. What do you think?
Yeah, I just think it's like, don't panic. You missed the deadline. Oh well, but like, get it. Don't put this off for another 3 years, which we've also seen. Missing it by 1 month or 2 months or 3 months is still better than 1 year. So you messed up, you're not going to jail. You still owe the tax, whether or not the faster you pay the tax, the faster you're going to stop that penalty clock running. So just get it filed. I have a lot of sympathy for people that miss the tax deadline. I get it. It's overwhelming. You're busy, especially if you're a business owner or you're a new business owner. You're busy running your business. You just forgot. You were stressed out about it. Like, I have empathy for you. But what I don't have empathy for is people who wait years and years and years and just keep sweeping it under the rug, and they create this massive problem for themselves that could have been solved, maybe not on the deadline, but within a year. So yeah, just get your shit filed. Talk to an accountant. And the best part is that accountants are so lovely if you contact them outside of tax season. Don't contact them April 16th. That's too soon. They're stressed out. They're probably sleeping, probably drinking. A week later, they're probably back from, Cancun or whatever. They're feeling great. Hey, accountant, I messed up. I missed the deadline. Can you help me file this tax return as quickly as possible? Dear taxpayer, of course, I'd love to help you. I'm so well rested. In fact, I'll give you 25% off for filing outside of tax season. So just get it done. You're not going to jail. It's very difficult to go to jail for not paying your taxes. You have to willingly defraud the US government and commit a crime. Otherwise, you're just running penalties and interest. Just get it filed.
100%. You're not gonna get Wesley sniped.
We have another tax and work question. Shane, you want to read this one?
Yeah, I hope you're doing well. I was wondering if we could chat a bit about contract work. Anything I should be aware of on the tax side, what records to keep, maybe some guidance on setting rates. A lot of contractors today were answering questions for y'all, unsurprisingly. The context is that someone I've worked with in the past approached me about doing some contract technical writing work for his company, and I may be interested in pursuing that, or more generally doing some freelance/contract work this year before or instead of getting a full-time position. I hear that, brother. Can't work for anyone else ever again. Are there any, assuming this is a fella, are there any resources BKFI has and or would be useful to have a call to talk about, whatever you think would be a good starting place? All right, so we're answering this on the podcast instead of responding to this email, correct? All right, got it. You want to take it?
Sorry, client. I think this is from like 3 months ago. No, so this client obviously got a meeting with their planner, so it's been worked out. But I thought it was such an interesting question. Actually, James, one of our associates, thought it was such an interesting question that we wanted to answer it on the pod. Yeah, it's like, I've never done this before. How do you run a business? How do you be a freelancer? What do you charge? Like, it's basically like, teach me to be a business owner in one little email. You've got 2 minutes. Here we go.
All you got it.
So anything I should be aware of on the tax side? Yeah, duh. Now you're paying taxes as a business owner. So in the first year of being a business owner, you will need to figure out what taxes you owe. You're not going to know that while you're collecting revenue, while you're having expenses. So my best advice on the tax side is any dollar that you make your first year in business and your second year and all years going forward, save 50% of that dollar in a high yield savings account called taxes, because we just don't know. If you live in New York City and you're married to someone who's got W-2 income of $500,000, you're probably going to have to pay 50% of that dollar to taxes anyway. So just save it in an account. Shane, you might disagree. You might say pay the taxes quarterly, but I don't think in that first year it's worth it. Just save the money in an account. You might owe a little teeny bit of penalties for not making those quarterly estimates, but just make sure you have the cash that when you go to your accountant, which you absolutely should as a contractor, they will help you figure out what the taxes are, and you will have more than enough money sitting in that account to pay those taxes when they are due. Anything else I forgot on the tax side?
Yeah, I actually agree with you on the tax thing, on just putting it in a high yield savings account. You just don't know what it's going to be that first year. And it's really hard to pay your taxes without knowing what they are. I do have to, as an Intuit stooge, I am paid by Intuit to advise them. They do have some cool products for less than $10 a month to help you categorize your transactions, do the bookkeeping on your own, and then also estimate your taxes. So QuickBooks Self-Employed, I have to recommend that. And they have some cool new features I can't talk about. Due to NDA.
Anyway, yeah, definitely. Exactly. Like if you're capable, definitely get software. Get bookkeeping software. Use QuickBooks. It's great. Every accountant uses it. What records to keep. I think this one's so important is make sure that if you're going to incur business expenses, keep them separate. A lot of people are like, oh, I need to start a company. I need to start an LLC, and I need an S corporation. You might at some point. But from a basic, I have revenue, I am providing services, someone is paying me these services, and I might need to take an Uber there to perform the services. I might need to pay for a website or hire a contractor. Those expenses need to be on a debit card, a credit card, or from a checking account that is separate from your personal stuff. It can be a personal card. It doesn't have to be a business card. That's just the easiest way to do your accounting by yourself in that first year. So keep it separate. Setting rates. I don't know. This is a hard one. How do you set your own hourly rate? Any thoughts or tips there?
Well, it depends on what kind of work you're doing. If you're doing work that you've never done before, I would charge not very much because then you get the opportunity to do it professionally. What's that phrase? You learn, I'm not going to remember it right now, but essentially you learn by doing. Anything you read, you will forget. Anything you hear, it will pass right through your brain. But if you actually do something, it's an old Confucius quote, but of course I obviously haven't used it before because I forgot it. So if you have the opportunity to work in something new and get trained to do something, we did a lot of this with BKFI when we were younger, like international tax stuff or like some weird kooky foreign tax, all of equity compensation stuff. Actually, 7-8 years ago, we were probably charging $80 an hour to do consulting on that. Now we charge like $700 an hour. So I call it sharpening the blade in terms of consulting. You want to keep your rates low, fill up your 40-hour work week with those lower rates. And then as you hit that, you no longer have time. You got to increase your rates, right? And then it's anything from hairdressing to legal work, right? That's what people do. You have open space, you get the rates where they need to be to fill up that space. And then as people fall off, you charge more to fill in that last slot. That's the whole gig. It's pretty simple, actually, in my opinion.
Yeah, I agree with you, except that I'm going to go back to what I said earlier, which is like, if this is a project or there is an actual deliverable, like, why are you charging hourly? Like, if you've done this before, you know how long it takes. Like, let's use writing as an example. If someone's asking you to do some technical writing, you know how long it takes you to write a paragraph of technical work. Maybe ChatGPT can help you speed up the process a little bit, but like, you know how long that takes. They're asking for 1,500 words on something. That's a price. That's not 6 hours. So I'm kind of over for certain things, hourly is just tracking your time is just miserable. If you can avoid that at all costs, please do.
Yes, I would agree with you. It's called value billing when you get beyond that, right? Like, this will take me 2 hours, but I'm going to charge $10,000 because I know exactly how to fix this problem that you have. And that's when you get into a niche and you have done all the work that you figured out exactly what kind of service you want to provide. No one else can do what you do. Then you do get to graduate from hourly billing, which incentivizes you to move slowly, which when people are hiring you, they're aware of that. Unfortunately, the law world has to work on that model, which is unfortunate. It not only caps the amount that you can make because you're restricted by how many hours there are in a work year, but you don't get to value bill, right? I guess they kind of build in that value billing of I charge $800 an hour, but you actually have to show up for that hour in a board meeting, or you have to do that hour of drafting whatever it is that you're drafting. So yes, you do get to graduate into value billing or value pricing, which is a whole deep world. Pricing is one of the biggest, complicated, most gnarliest things about being a business owner. It's probably where we spend 30% of our brain space when you first get started, unfortunately, instead of actually focus on providing good products. So anyway, yeah, love it.
Love it. Well, thanks for the questions, guys. Keep them coming. Just a reminder, you can find all of this information and more at our website, which is brooklynfi.com/episode 102. Leave us a voicemail. Email us. What? Why are you doing this?
2, not 3.
Didn't I say 2? Did I say 3?
You said 2. Well,
Okay.
earlier you said 3. You
I
told
did
all
say
our
3. I did.
you told all our employees there's episode 103.
Oopsie. But yeah, you can also email us, which is the liquidity event at brooklynfi.com. You can always leave us reviews. We are so happy to be back, and we're going to answer
back,
all your
baby.
questions. It's going to be great. We'll see you next Friday. Bye.